All right, welcome back to another episode of the Black Bullion Show. Gold is down, and you may be asking yourself why that might be. I will actually show you that very shortly, but first, if you're new to this channel, please hit that big red rectangular subscribe button down below. Also, please hit the like button. It helps to get this economic evangelism out there to the masses, bringing more people into precious metals. Okay, guys, just take heart. Gold is going down right now, but that's primarily because of its number one competitor, the U.S. 10-year Treasury. The yield of it has gone up, and it's gone up so much that it's actually broken past its resistance level via the simple moving average. And this is not only true of maybe short date ranges such as 30-day ranges, it even goes as far back as a year. And you may be asking yourself, well, why this is? And that's primarily because of a lot of risk on behavior that we are starting to see take place not only in the Treasury, but also, as you guys may see, within equities. So let's take a look at how the 10-year is performing. Now, today's date is actually June 4th and Thursday. And one of the things that you're going to notice immediately from this chart is that the black line above is the resistance level. This is based off of the simple moving average. And the graph that you'll see in blue beneath of it, the line graph, that's sometimes peaking above it, going below it over a given period of time, that's the yield for the US 10-year Treasury. Now, obviously, after the crisis hit, we start to see the yield go down. You might be asking, well, why that is. That's because so many people were piling into the US 10-year Treasury. And one of the things you have to understand is when a lot of people are piling into the 10-year, the rates, the actual yield of it will go down, and the price of it will rise. More and more people are getting into it, obviously, so they're going to rise the prices. The yield is going to go down as more and more people get into it. And as more and more people leave it, then you're going to start seeing that negative correlation take place on the other end of things. The yield will start to rise, and then the prices will start to lessen. And what you're seeing right here is the actual yield peaking above the resistance level that was established by the simple moving average. And this has been going on pretty much since the start of the new month of June. And we're starting to see this yield peak above the resistance level. Now, when this happens, when you start to see a general uptrend and it peaks, or when you start to see an uptrend after a downtrend and it peaks above the resistance level, you might actually start to get some renewed strength and a new uptrend after the downtrend has settled. Now, if you even take a look at how the 10-year yield is behaving, after March hit, it started to go down and then it started to settle while the resistance level was coming down. And then they started to meet together to the point where they started to converge. And then the yield eventually peaked above the resistance level. So again, we may continue to see a breakout of upward momentum in the 10-year yield. Again, not sure how long this will last, but gold will certainly have competition when this happens. And as we have seen, the gold price has come down. Now, today is Thursday. A lot of information has come out. As we know, when Thursdays hit, a lot of economic data comes out. But this actually started to happen a couple of days ago. So who knows how things are going to play out as things move on. Sorry about the kids screaming. I have the window open. But I just wanted to give a quick update as to why we might be seeing some of these gold prices coming down. It could be because we're starting to see a lot of risk on behavior affecting the markets. But let me know what you guys think in the comments section below. Thanks again for watching. Hit that red subscribe button. Also, please hit that like button. Thanks again. It's Black Bullion.